Hello, dear Professor Ronald Hochreiter. Thank you for accepting the invitation to record this podcast in the series of that we've just started in our FinTech Horizon 2020 project. And I would like to have your opinion on a few topics. So first, I would start with the fact that bringing technology and artificial intelligence into the field of financial sector has been a very important trend for quite a while and has been significantly enhanced by the pandemic. So what are the main trends that you have spotted regarding this inclusion of AI and technology into the financial sector?
First off, thank you for having me, and thank you for this question. I think what we could observe recently is that many fintechs and especially financial companies that claim to use AI and machine learning actually don't do so. I mean, there's this huge story about Wirecard, and Markus Baum was always talking about how much AI they use, but internally, it was well known that they were only doing Excel sheets. So I think what we now start to see is that this over-promising of what AI can do, which started in 2015, finally got into a realistic shape, and people start to understand that if they want to really solve their problems using AI and machine learning, they have to understand, they have to re-investigate all the ideas and information that we had already 20 years or 10 years ago in the field of data mining, when the idea was much more understanding the business and translating the business, the financial business in this concrete case, into data structures that can be handled optimally with machine learning and AI methods. And we have one serious problem here, is that machine learning and AI basically often requires the independence of observations. And whenever we do finance, we often have time series or otherwise dependent data sets where these methods actually don't work, at least from a conceptual point of view, not as they should. And this is where people just need to get realistic and understand what to do, and to understand that large AI models in fintech are basically often just a combination of small machine learning models. You can also see that in machine learning for trading systems at hedge funds and investment banks, where you use basically one smaller machine learning model as a meta model that picks underlying real investment models on a dynamic basis, because people understood that there can never ever be the holy grail model, but rather different models that might work best in different situations, with a model on top that actually selects which model is appropriate for the current, let's say in this case, market regime.
Thank you for your thoughts, and I would like to connect exactly with the main ideas that you've mentioned, and I would like to know your opinion about the gap. So how far apart is the academic research and the practice, the practical implementation? So how do you see, at least in Europe, this road from research, academic research mainly, to innovation and practical implementation? So are we aligned, or are these quite far apart?
I mean, especially in finance, I often emphasize this gap between academia and industry, especially, for example, in portfolio optimization, where you see that, for example, the models that are used to compute portfolios, optimal portfolios, in academia, they are completely complex, and in practice, in industry, they have to be simple. While the data gathering, the data cleansing, and afterwards also the stress testing and back testing, this needs to be perfect in an industry setting, and in academia, this is often neglected. Why? Because in academia, we tend to do only what we like to do. Yeah, and this is one of the beautiful things about academia. But unfortunately, for example, if you really want to put in a machine learning model, an AI model into production, you have to do so many things that are actually not funny. This is what data scientists often complain about when they say, oh, 90% of our job is just data cleansing and only 10% is doing the models. But this is in itself the issue. So to accept that if you would rather do a conceptual modeling and say, okay, we need to integrate this scientific process into industry, this would help. And this is where academia is really helpful to show industry that even if you have a very businessy model, you need to start to pose a research question, and you need to start to pose hypotheses. Yeah? People always say, yeah, we know that, but they don't do. Or if they do, it's also not really connected to the problem itself. And people always think that's in industry think that's too geeky or too scientific, which it is not. I mean, you might relabel research question to just business question. But this is what often bugs me when you see even data scientists doing something, an approach which is completely non-scientific in any way. They just use a model because they heard somewhere it is the best. Or they evaluate a model with measures which make no sense from a business relation. So because they don't have to argue, they don't have to challenge. There's no one that challenges them. There is no reviewer. When you submit the scientific paper, it gets reviewed. And in business, this review process is not on this level of posting the right question and especially setting up the correct evaluation framework. So I think this is something where often this process that in the end, as soon as you use data science, machine learning, and AI in business context, what you basically need to do is setting this in this scientific process chain. And I think this is where science can really help to do something also in the sense of what in finance is well known as model validation for risk management models, which really also needs to be done in the case of AI. Because for some reason, what you often see, each and every standard risk management model, it gets validated and goes through evaluation processes. And whenever you label something as AI, everyone seems this is magic and we don't need to, let's say, really evaluate in a way or another. So this is basically the important thing that academia has to accept, that the models that you publish in papers are not directly implementable, because you basically skip all the overhead that's not funny, but that you have to do in industry. And the industry has to accept that basically whenever you use these methods, you have to follow the scientific process. And this is where especially academia can support business.
Okay, and going further, I would like to have from you a brief presentation, at least the main details about the paper that you have published, and you've also presented this use case in the FinTech project. So try to give us a flavor for those that would like to dive more into the topic and actually read the paper and try to investigate more.
What I did here is introduce a real, let's say, real machine learning model for robo-advisory. Because what you often see, because this in our EU project, market risk due to robo-advisory was, and AI was a big topic. And here what I did is creating a model that could, on one hand, be used as a starting point for people, companies providing robo-advisory, but also used by supervisors to test how different AI-based models would really change market risk in a way or another. So it's basically a tool that you can use as a single operator or in a larger simulation framework for regulators. And basically, what you see is that most robo-advisors are pretty simple. There's also even if they claim to do AI and machine learning, they don't do so, because practically it's just a very simplified enumeration of the risk aversion of the person you want to robo-advise automatically, and then picking an ETF portfolio. And what the model that I presented does is really to trying to integrate the best of both worlds, and setting the target in the machine learning model to something which is specific to a certain user of the robo-advisory model, which means that if you can even do some kind of gamification, in this sense that you let people change their target. And with target, I mean, for example, the maximum, minimize the maximum drawdown within the next 6 months, or reduce, minimize the volatility during the next 3 months. And given this target in the future, and based this target for the future is actually used to build the feature matrix, which is then fed into the machine learning model to compute the optimal, in this case also, of course, ETF portfolio for the respective user.
Thank you very much for the details, and I hope they were useful for those that would like to know more about the model you've proposed in the paper. And now, just to sum up, I would kindly ask you to give us your opinion on what you think is next in the field. What's the hottest topic or the most important trend that you see both in research and in practice in what AI use in finance is regarding?
It's basically two things which are even more related that one thinks in a first step. One is, of course, the large field of explainable AI and interpretable ML, and the other thing is synthesization. So this type of anonymization, which can be used to build models with data sets that are not directly viewable by those that build the model. And if you take a look at explainable AI, it's a real hot topic, but I would not really comment about some of even papers that are published at the moment, because they are probably nice from a scientific point of view, but they lack the problem that you often have in machine learning. They lack the problem of what do I do if I have a very complex dependency, a complex dependency structure in my data. And then I need to explain that, and there the laws of statistics can't be really changed, and this is what some models do. And this is why you see that most people explain explainable AI using images, because then you can see it. But this is also what I often say, this is cheating, because in images you only have 2 dimensions. So this would be something like if I have a feature matrix in a bank and doing customer relationship management and only having 2 features. Problem is, it's the complete opposite. We have often data sets with 1,000 attributes of our customers in our retail bank. And then actually why we use machine learning is to understand this complex dependency. And the idea, if I use some kind of interpretable machine learning model, then right from the beginning, then actually I can see and understand this subtle dependency. And the question is, how on earth should it be possible afterwards to get this complex dependency understandable if I first do something which is not explained? So I think there's lots of things to do in scaling, so to say, explainable AI to standard tabular data with a huge number of attributes. With huge number, I mean 1,000, which we have, for example, in a customer database in retail banks. Same with synthesization, a real hot topic, and also you have the same problem of how do I synthesize without losing dependency too much. Rephrasing that, without using so much distribution assumption in advance, that what I do, regardless of what the input is, will always be just based on my distribution assumption and not a real representation of data. However, I think in both areas there is active research, and I'm pretty sure that we will soon be able to converge these two things, because they're often overlapping, because in synthesization, we often use a non-explainable methods like CT GANs and things like this. So I think both industries waiting for both things, because we need explainable AI to convince the regulators with the models. And synthesization is also even in some large companies important, because they don't even trust other departments with data. So these two things, I'm pretty positive that within the next 3 or 5 years, all these ideas from academia with the feedback loop in industry will be sufficient to, on one hand, use it in banks and understand things better and synthesize data, and on the other hand, really convince the regulator to use in the first step, non-interpretable models.
Thank you very much for your time and for sharing this idea with me and hopefully with our viewers. And if you agree, I would kindly ask to record one more video, in at least one, in the future and continue this discussion. So thank you again for being here and accepting the invitation.
Thank you very much.